Have you ever wondered if there's something massive, something really impactful happening right under our noses that, well, almost no one is talking about?
Oh,
Something
absolutely.
so significant it could change the financial game for a whole generation, but it's just buried somewhere.
It's amazing how that happens, isn't it?
Yeah.
Especially, when things get tucked away in these huge pieces of legislation,
hmm
thousands of pages.
Yeah, this definitely feels like one of those moments. So, welcome everyone to this deep dive. Our mission today is to unpack a really critical and kind of quiet shift that's happening with U.S. federal student loans.
Right.
We're going to pull back the curtain on some pretty major changes to in-school deferment, pausing payments while you're studying, and other borrower protections too.
And these aren't small tweaks, are they?
No, not at all. As you'll see, these are going to fundamentally impact future students, current students thinking about borrowing more, and frankly, whole families.
And look, this isn't just guesswork or some rumor floating around. The info for today's dive, it comes from a really compelling source. An expert who, they told us, found this key detail buried. There were deep inside that bill they called the One Big Beautiful Bill, signed into law just this past July.
Wow. And why did they dig so deep?
Well, they said they read the fine print because the stakes were really personal for them. They're a parent and also a student themselves, so it hit close to home.
Okay, let's get into this then. Our source uses some strong language, calling the core change a structural gutting of borrower protection. That sounds serious. What exactly is this big shift they found?
It's pretty fundamental. Basically, that long-standing right you've always had to defer your federal student loan payments while you're actually enrolled in school, that's ending.
Ending completely.
Yeah, it's not just being adjusted or limited, it's being removed as a standard feature for new loans.
Okay, wow. And the effective date, when does this actually kick in?
So this is really crucial. It applies to new loans disbursed on or after July 1st, 2026.
July 1st, 2026.
Right, which lines up perfectly with the 2026-27 academic year. So there's a clear before and after point.
Okay, so once that date hits, July 1st, 2026, what's the immediate reality for a student taking out a new loan, like day one?
Well, that's the biggest shock, I think. Students will be expected to start repayment immediately when the loan is disbursed.
Immediate.
Immediately. The source emphasizes this. Loan payments and interest charges start the moment the money is disbursed. They even said even before the student has sat their first final exam.
Wait, so the money hits their account, maybe to pay tuition or whatever, and boom, the clock starts ticking on interest and repayment before they've even really started the semester.
That's exactly it. It's a profound shift in how we think about the timing of student debt.
And is this for everyone or just certain types of students?
It's universal. That's another key point.
Universal, meaning undergrad, grad students.
Yep. Undergrad, graduate, full-time students, part-time students, doesn't matter.
And what about subsidized loans? Those were always the ones where the government paid the interest while you were in school, right?
Right. Well, under this change, even those subsidized loans will start generating interest from day one of disbursement.
Wow. So that traditional benefit of subsidized loans, the interest-free period while in school, that's gone too for these new loans.
That's gone too. It really changes the total cost calculation for pretty much everyone taking out new federal loans after that date.
Okay, deep breaths for anyone listening who might be panicking right now. Let's clarify who is not affected by this, at least for now.
Good point. Yeah, if your loans were already disbursed before July 1st, 2026, the old rules still apply to those loans.
So you're grandfathered in.
Exactly. You're grandfathered in, thankfully. This is specifically about loans taken out on or after that July 2026 date.
Okay. But the changes don't stop with just the in-school deferment, do they? Our source mentioned other safety nets disappearing too.
No, that's right. The same bill, sort of quietly, also eliminates other really critical safety nets for borrowers facing tough times.
Like what?
Things like the specific deferments for economic hardship and for unemployment. Those are also set to disappear for new loans.
For economic hardship and unemployment, when do those go away?
Those have a slightly later date. They'll be gone for new loans disbursed after July 1st, 2027.
July 1st, 2027. So a year later than the in-school deferment change. That means fewer options if you lose your job or hit a really rough financial patch.
Precisely. And it gets even tighter because even the general forbearance option is being cut back significantly.
General forbearance. How is that changing?
It's being really pared back. The new limit is just 9 months total, within any 24-month window.
9 months in 2 years, that's not a lot of breathing room.
Not at all.
Yeah.
Our source really stressed the implication here. They said, if you lose your job, get sick, or have a major life event, that window will close fast.
So putting it all together,
Yeah.
losing in-school deferment, losing economic hardship and unemployment deferments later on, and getting much less forbearance. The bottom line seems pretty stark. Our source summed it up by saying, if you're borrowing after these dates, the expectation is basically that you'll pay, quote, no matter what's going on in your life.
Hmm.
That's the tough takeaway. It signals a major shift in the underlying assumptions about repayment flexibility.
So why does this matter so much? I mean, beyond the obvious financial pressure, how does this change the bigger picture of higher education?
Well, the source argues this isn't just a technical financial adjustment. It fundamentally reshapes who gets to attend in the first place.
How so?
Because college just becomes more expensive right from the start. If you have to factor in loan payments immediately, or at least accruing interest immediately, that raises the barrier to entry.
Right. That makes sense. And this led our expert to talk about this idea of a mortgaged future. What did they mean by that?
They painted this picture where education, which we used to think of as an investment in the future, now comes with that future already mortgaged before it even begins.
They highlighted that there's, in their words, no grace, no acknowledgement of the time, labor, or precarity that defines student life today.
No grace period. No nod to the fact that students are often juggling classes, maybe jobs, maybe family. Just pay up now.
Yeah, it feels like a disconnect from the reality many students face.
And this burden, it doesn't fall evenly, does it?
No, and that's a crucial point the source made. This hits working-class students and families particularly hard.
Why them specifically?
Well, think about it. These are often the students who have to work while studying. Maybe they're caring for family members. They're living on incredibly tight margins already.
Right.
For them, the ability to pause payments wasn't just like a nice perk. Our source said it was often the only way forward. Taking that away, well, it could remove their path entirely.
It becomes an access issue, not just a repayment issue.
Exactly. And layered on top of all this is something we can't forget. These loans are incredibly hard to get rid of if things go wrong.
Ah, bankruptcy issue. Right. Unlike most other kinds of debt, federal student loans generally can't be discharged in bankruptcy. Our source pointed out this goes back to changes championed by then-Senator Joe Biden in the late 1990s.
And that legal wall still stands, as they put it.
It does, meaning if the system fails you, you don't get a reset. You just get deeper in. There's no safety valve that way.
So you take away the pauses, the deferments, the forbearance flexibility, and there's no escape hatch at the end either.
It paints a picture of what our source called a trap one that's been quietly tightened over time, with the door basically closing faster for the next generation.
It does feel like more than just tightening the screws financially. It feels like changing the whole setup.
Now, if you're listening and thinking, this must be some kind of mistake, an unintended consequence, well, the source we're drawing from argues pretty strongly that this is actually deliberate, part of a plan.
A deliberate plan. What's the thinking there?
They pointed to reporting, like from the Wall Street Journal, suggesting that, quote, under Republican leadership, the federal government is retreating from student lending.
Retreating how?
Well, things like downsizing the Department of Education and slashing these very repayment options and protections we're talking about. It fits a pattern, they argue.
And if the federal government retreats?
Exactly. The source brings up that classic economic principle. When the public sector steps back, the private sector steps in.
Ah, so private banks might see an opportunity here.
That's the argument. This legislation, perhaps intentionally or not, clears the way for private banks to re-enter the student loan market in a bigger way.
And they might offer their own versions of deferment or hardship plans.
Maybe. But the source cautions it would likely be at a cost and with penalties. Private loans often lack the consumer protections built into federal loans, even the reduced ones.
So what used to be framed as a shared public commitment to accessible education
Is being, as the source put it, hollowed out, converted into a profit opportunity. They explicitly called this neoliberal austerity in practice, taking a public good and turning it into a market.
It's a pretty significant reframing of the government's role in higher education financing.
Which brings us to a key question. If these changes are so huge, why haven't most of us heard about this? Why isn't it front page news?
That's the baffling part, isn't it? How did something this impactful stay so quiet?
Well, first, as we mentioned, it was quietly tucked into the 1,000-plus pages of the bill. Easy to miss unless you're specifically looking.
Buried in the fine print.
Literally. And there was no big public discussion, was there? No national debate, no town hall, our source noted, no viral TikTok explainer.
Yeah, just sort of happened.
And the source had a thought on the media suggesting that corporate media, they've been largely silent for obvious reasons,
Ugh.
implying perhaps it doesn't fit certain narratives or interests.
So how did they find it then?
Pure diligence, it sounds like. They found it by combing through the text line by line after the fact, specifically because, as we said, they had personal skin in the game as a parent and student.
Wow. Just reading the bill text.
Yeah. And their big concern now is that by the time most families find out, it'll be too late. They'll already be signing up for loans under these new rules without realizing the terms have changed so drastically.
Okay, this is a lot to process, and it definitely sounds concerning. For listeners trying to figure out what this means for them or their kids, what are the practical takeaways? What can people actually do?
Right, let's get practical. The source offered a few suggestions.
Well-
First, for students and families, if borrowing is necessary and you can manage it, try to take out the loans you need before that July 1st, 2026 cutoff. That keeps you under the old existing rules for those loans.
So timing becomes critical if you're on the edge there.
Absolutely. And second, talk to your children now, especially if they're in high school or approaching college age. Discuss these implications for their future plans.
Yeah, because even something like taking a gap year could make a difference, right? If it pushes their borrowing into the post-July 2026 window.
Exactly. It could change the entire financial structure of their education debt. And third, just generally, keep track of repayment plan changes. This whole landscape is shifting fast, so staying informed is really key.
Okay, those are good individual steps. What about the bigger picture? Can anything be done about the policy itself?
Well, the source issued a pretty strong call to action for awareness. They basically said, spread the word. Since mainstream coverage is lacking, word of mouth still works. Share this information.
Let people know what's happening.
Yeah. And importantly, don't just accept this as the new normal. The suggestion was to write to your representatives, speak up in your communities, make some noise about it.
Use your voice, basically.
Right. And maybe leverage political moments. Our source suggested using the upcoming midterm season to specifically ask candidates about this bill. Make them explain the government's retreat from supporting higher education this way.
Force them to take a position on it.
Exactly. It all comes back to that fundamental idea the source kept returning to. Education should be a right, not a revenue stream.
That really frames the core tension here, doesn't it? Is education a public good or a private investment?
It does, and thinking about the implications, it's not just a small financial adjustment. Our source argues this represents a fundamental break in the social contract.
How so? A break in the contract.
Well, for decades, the federal government's message to students was essentially borrow now, pay later. An entire system, an entire generation's approach to paying for college was built on that promise, especially the idea of deferment while in school.
The promise of flexibility, of time to get on your feet.
Exactly. And now, according to this analysis, that promise is being yanked out from under the next generation, quietly, cruelly, and without a plan for what comes next.
Quietly and cruelly. Strong words.
They are. And it leaves you wondering, right? What really happens when such massive changes are pushed through without real public awareness or debate?
Yeah. What are the long-term consequences of that? For access, for debt levels, for inequality?
It feels like more than just policy. Our source ended by saying this isn't just about student loans. It's like a line being drawn about who gets opportunity and who bears the risk in our society going forward. Something to really think about.